Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we shall be looking at the technical analysis on the currency pair NZD USD. And as usual, we'll be talking about fundamentals before we move right down ahead to technicals, which is purely what we'll be seeing on the chart. We have noticed that NZD USD sticks to strong intraday gains above the mid 0.640s over a 1-month high, as the NZD USD regains strong positive traction and jumps to over a month high on Wednesday. And the optimism, of course, over a Chinese economic recovery provides a strong lift to the risk-sensitive Kiwi. And the bulls seem rather unaffected by stronger USD and might now aim to reclaim the 0.6500 mark. Now, the NZD pair has attracted fresh buying options following an early dip of to the 0.375 area and jumps to over a 1-month high during the latter part of the Asian session on Wednesday. Now, the pair is currently placed around mid 0.640s, up earlier 0.40% for the day, and has now moved well within the striking balance of a multi-month peak touched in December. Now, the mostly upbeat Chinese macro data released on Monday, along with more stimulus measures announced by the Chinese government, has fueled optimism over a strong recovery in the world's second largest economy. This in turn boosts investors' confidence, which benefits the risk-sensitive Kiwi and provides a goodish lift to the NZD-USD pair. Now, the momentum seems rather unaffected by resurgent US dollar demand, boosted by the Bank of Japan-inspired sell-off in the Japanese yen. Of course, the USD strength, meanwhile, remains limited amid firming expectations for a less aggressive policy tightening by the Fed. In fact, the markets now seem convinced that the US Central Bank will soften its hawkish stance amid signs of easing inflationary pressure and have been pricing in a smaller 25 BPS rate hike in February. This leads to fresh leg down in the US Treasury bond yields, which should act as a headwind for the buck and favors the NZD USD bulls. And also from a technical perspective, sustained strength beyond the top end of a 1.5-week-old trading range support. Prospect for further near-term appreciating move for the NZD USD pair. Hence, some follow-through move up backwards towards reclaiming the 0.6500 psychological mark. Now looks like a distinct possibility, while traders now look to the US economic docket, highlighting the producer price index and monthly retail sales for fresh impetus. Now, what to expect from this technically? Checking out our daily time frame, we are seeing a kick out of momentum for breakout of the most recent resistance zone at 0.64909. We are expecting a real push up to about 180 to 200 pips, which is at 0.66689 or at most 0.66881, which of course is good money, 200 pips from that entry point. Alternative scenario means probable pullback before still extending to the 0.67 and 66 threshold. And that's our technical analysis on today's currency pair, NZD USD. Now let's move over to the stock markets. Hello guys, welcome back. On today's stock market, we'll be having a look at Twitter. And the main questions on the headlines today has been, is Twitter just a machine to control narrative for Elon Musk? Why the Tesla stock paid the price and now looks very attractive? This, of course, has been making headlines on the stock market, and we are expecting at the open, we should see something like a push up to the upside, most likely a gap. And you can see, of course, that the speeches usually have high impacts. And Michael Lee has an interesting take on what drove Elon Musk's Twitter takeover and the subsequent decline in Tesla. Now, he can say it's all about free speech for Elon. It's about having a machine to control narrative, because when you are that rich, you need one. Lee has said on Tuesday afternoon on Stock Market Love Movies. So what to know, Musk has finalized a Twitter deal in late October. Since that time, Tesla shares has trended lower, and supposedly Twitter has been having enough gains, and this could continue for a long time. As we notice, reach out to the most recent resistance point at 54.27 and a probable hot, and this might result to a pullback before a much more push up and a breakout of that major resistance at 53.54. So what to expect from this if we are to make an entry at this point and let our trade run up to the 50-point zones, 55 zones, and 56 zones. We're looking at nothing less than 50 to 100 pips, of course, from both entry points. And that's our technical analysis on today's stock market Twitter. I remain your host, Nick. Bye for now.